$438 billion in 3 months. The M&A winter is officially dead.
I knew you'd say that. It's really just eased financing conditions thawing the ice, Nate.
Let me have this. Unilever combining its food arm with McCormick for $44.8 billion is a classic mega deal. It's spicy.
Did you seriously just call a spice merger spicy?
I absolutely did. And wait until you see what the infrastructure giants are buying next. The rundown. $438 billion in a single quarter. I am officially calling the M&A winter dead and buried.
It's a 155% jump from last year. And sure, the debt market's finally thawed out, but look at what's actually getting bought right now. Cintas is dropping $5.5 billion on UniFirst. We are consolidating the companies that wash the floor mats.
Hey, floor mats print cash. It's a classic scale play. Same thing with Public Storage eating National Storage affiliates for $10.5 billion. All stock, by the way.
I saw that. Everyone wants to own the concrete boxes where we put our extra floor mats.
Exactly, but the real heavyweights are back too. GIP and EQT teaming up to take down AES Corp. $33.4 billion for pure infrastructure. When private equity starts hunting public utility companies of that size, you know the financing spigot is wide open.
Well, we saw a 54% bump in sponsor-led deal value this quarter. Though honestly, Nate, the deal that actually made me laugh out loud this morning, Danone paying $1 billion for Huel.
Oh, the influencer protein sludge? I kind of love this deal for them. Danone desperately needs a younger demographic, and Huel owns that entire gym bro/tech bro overlap.
You can't be serious. $1 billion for powdered food marketed on Instagram. The brand equity is completely tied to paid ads. The second the social algorithms change, those margins vanish.
You're completely underestimating the recurring revenue model. People subscribe to that stuff like it's a religion. It's an instant shot of growth for a legacy dairy company.
$1 billion shot of powdered oats. I read their consumer trends report, Nate. It's a massive overpay. It's almost as wild as the sports bankers buzzing about Rip City Rising quietly taking a majority stake in the Portland Trailblazers.
Sports franchises are the new tech stocks. But fine, if you want to talk about legacy consumer brands dropping absolute fortunes, we need to look at the real crown jewel of this quarter.
$44.8 billion for the Unilever and McCormick combination.
The mega deal is back. I want to rip into the valuation on this food fight, but first we need to talk about how QXO just bought itself $200 billion of addressable market. The big one. $438 billion in a single quarter. I feel like I need to say that again just to make it real.
Please don't. My terminal crashed twice this morning just trying to pass the Q1 aggregate data.
It's a 155% year-over-year jump. The M&A winter is officially over, Maya. Bankers are pricing out beach houses again. Eased financing conditions have completely thawed the market.
Well, they're definitely buying spices. Unilever dropping $44.8 billion to combine its food arm with McCormick is exactly the kind of bloated mega deal we thought regulators killed 2 years ago.
It's a masterpiece. You take Unilever's global distribution, which operates like a sovereign nation at this point, and you inject McCormick's margins. It's the ultimate flavor meets scale play.
A masterpiece? Nate, you're letting your old pitch deck habits show. They're paying a staggering premium just to mash Hellmann's mayonnaise together with Old Bay seasoning.
Hey, spicy mayo is a high-growth category.
I read the footnotes in the press release. Unilever is totally stalling on organic growth. They're just using these new, cheaper debt windows to buy a growth narrative because they can't invent one internally.
You're way too cynical on this. Eased financing is just the catalyst. Look at the whole board right now. Private equity deal value is up 54%. Sponsors are aggressively hunting public companies to take private. If Unilever didn't move on McCormick right now, a mega fund would have snatched them up. Unilever had to play defense.
Taking McCormick private would require a massive debt syndicate. I don't buy that Unilever was forced into this by some phantom PE threat. I think they saw the window open and panicked. They're trying to distract investors from the fact that tech deals are up 540% right now. Tech has the AI halo, and consumer goods are just flatlining.
Nobody is comparing garlic powder to artificial intelligence, Maya.
Capital allocation committees are. Money flows where the yield is.
Okay, fair. But tell me you don't respect the sheer audacity of a $44 billion grocery aisle consolidation.
I respect the absolute mountain of advisory fees your former colleagues are pulling down. I'm just highly skeptical of the integration timeline. Have you ever actually looked at the track record of merging legacy supply chain software? It's like trying to mix oil and water.
Or oil and vinegar.
Don't ruin my point with a salad dressing pun.
I had to do it. But seriously, this deal sets the floor for the rest of the year. The mega deal is back.
Assuming the antitrust lawyers don't wake up and ruin the party. Speaking of massive market grabs, Unilever wasn't the only giant expanding its footprint this quarter.
Right, Brad Jacobs is out there doing exactly what he does best. We need to talk about QXO dropping $2.25 billion on Kodiak building partners. Voices. I am reading this analyst note from this morning claiming the 54% jump in sponsor-led deal value proves private equity is finally unlocking hidden growth in public markets.
Oh, please. Hidden growth. You know exactly what that translates to.
Financial engineering.
It means the debt markets finally thawed and they have a mountain of dry powder burning a hole in their pockets. A 155% jump in Q1 deal volume is not some sudden strategic awakening. It is just cheaper money.
See, I disagree. You look at that $438 billion total for the quarter, and yes, financing is easier. But you cannot ignore the narrative shift. Tech deals alone are up 540%. That is not just cheap debt. That is pure AI panic.
I will give you the AI panic. Every board is terrified of being left behind on data infrastructure and cyber. But do not tell me consumer brands are buying for deep strategic value right now. Danone just dropped $1 billion on Huel.
$1 billion for the influencer protein powder?
$1 billion. And I read the release. They actually use the phrase nutritionally complete lifestyle ecosystem.
Wow, I need to update my vocabulary. That is phenomenal corporate spin.
It is a meal replacement shake, Nate. The valuation is absurd.
Hey, if people are buying the ecosystem, you sell them the ecosystem. Just like Rip City Rising quietly scooping up a majority stake in the Trailblazers, sports are the ultimate lifestyle ecosystem right now.
True, but those multiples are based on actual media rights, not Instagram ads. Speaking of multiples we need to scrutinize, I am pulling up the filings on this recent wave of biotech deals.
Oh, right. Gilead and Novartis both throwing around $2 billion checks.
Exactly. And while we wait for the ink to dry on those, I am hearing some serious regulatory rumblings about waste management consolidation down south, following GFL Environmental's latest land grab. Spill the tea.
I still cannot believe Danone dropped a clean $1 billion on Huel.
You are just mad because you actually drink it.
I am literally drinking it right now. But $1 billion? For powdered food that tastes like dusty oats? That is a classic banker pitch right there. Slap the word influencer in the deck, mention TikTok, and add a 0 to the valuation.
I am going to stop you right there. Look at the gross margins. You are paying for the direct-to-consumer data, not just the dust. Danone needs that demographic desperately. Their core yogurt buyers are aging out.
Aging out of yogurt? What does that even mean? Is there a mandatory retirement age for eating Activia?
You know exactly what it means. They need 20-somethings who optimize their breakfast macros. It is a smart defensive play.
Fine, I will concede the data play. But speaking of executive shakeups, Keurig Dr. Pepper tapping Rafael Oliveira to run the JDE Peet's coffee empire is fascinating. The caffeine wars are escalating.
They are. But honestly, the consumer stuff is just noise compared to what the sports bankers are whispering about today.
Oh, the Rip City Rising rumors?
Exactly. They are quietly taking a majority stake in the Portland Trailblazers.
Quietly, half of Wall Street is gossiping about it over overpriced salads.
But look at the structure. Usually these sports franchises trade hands with massive press tours. This one is happening entirely in the shadows. I spent an hour digging through the Delaware corporate registry this morning.
And what did the sacred footnotes tell you?
That the real play is the commercial real estate around the arena, not the team itself. It is a pure infrastructure deal wearing a basketball jersey.
See, that is why I love sports deals right now. Everyone thinks it is about selling tickets, but it is always about parking garages and tax breaks. Speaking of massive infrastructure plays wearing different outfits, we need to look at what GIP and EQT are doing with AES Corp. Tomorrow's radar. Tomorrow morning, I'm watching biotech. Gilead dropping $2.2 billion for Uro medicines and Novartis matching that energy with a $2 billion breast cancer play. The M&A winter is officially dead.
Dead? I call it a mild thaw. Yes, Q1 deal value is up 155%, but mega deals like Unilever are inflating the baseline.
Oh, come on. A 54% jump in sponsor-led deals isn't Unilever. Private equity is actively taking companies private. They're hunting again.
Sure, but they're hunting in the discount bin. Anyway, what I'm actually watching tomorrow is garbage.
Excuse me?
Waste management. GFL Environmental just made another southern US land grab with Frontier Waste Solutions. I'm waiting to see if regulators finally rumble about antitrust.
Ah, yes. Nothing gets you going quite like a localized landfill monopoly.
It's a pure cash flow machine. Speaking of cash flow, tomorrow we're digging into Danone paying $1 billion for Huel.
$1 billion for influencer protein powder. I can't wait to tear apart that multiple.